So we can start by defining the advance tax. So advance tax is tax paid in advance before a public service vehicle or a commercial vehicle is licensed at the rates applicable. So once you purchase a vehicle that is for commercial purposes, before this vehicle is being inspected at the NTSA, the first thing you have to do is you pay advance tax. So basically, advance tax is basically for the commercial and the public service vehicles. Hakuna mahali kwingine. There are the only two items that you pay advance tax on: public service vehicle and the commercial vehicles. Commercial vehicles, they are, for example, the lorries that transports things, the luggages. Public ni ile ya matatu. So once you purchase it, before you get a license from NTSA, you have to pay an advance tax. Then, what are the tax rates for advance tax? So for example, for vans, pickups, trucks, prime movers, trailers, and lorries, you pay 1,500 per ton of a lorry capacity, subject to the minimum of 2,400 per year of income. So once you have bought a pickup or a truck or a prime movers or a trailer or a lorry, so before you get that license, before you go for inspection in NTSA, number one, you have to pay that advance tax. So it is the rate is 1,500 per ton, or a minimum of 2,400 per year of income. Then we have saloons, car, stations, minibuses, buses, and coaches. Saloon cars, basically these are for, you have bought this car for basically commercial, that is for public service. For example, for the ones that zinafanya Uber, Uber hizo taxi. So you have to pay for, once you go for inspection, you have to pay that advance tax. For example, you pay for 60 shillings per passenger capacity per month, subject to a minimum of 2,400 per year of income. So basically, before you get the license, you have to pay for, before your vehicle is inspected and they get licensed to do the job. Then advance tax is not a final tax. Taxpayers who have paid an advance tax are required to declare the same in their income tax returns submitted yearly, and they pay an additional tax due. So once you have paid your tax, your advance tax, at the end of the day, you have done business with your vehicle. At the end of the year, you are supposed to file your tax. So what happens? This advance tax you had paid before is not final. So you just do everything, then add it together, subtract from the final taxation you do at the end of the day. Then when you get it, if it is due, you pay. If it's a negative, that is, if it's a refund, you claim for that refund. Then it has a deadline. It is due on 20th of January or before the transfer of ownership of a vehicle. So once you have bought a vehicle, maybe you have bought a vehicle on July. Remember, by 20th of January the following year, you are supposed to, you could have filed, or before the transfer of owner. So you have two options. Either you pay 20th of January or before you do any transfer of ownership. Maybe you have bought a vehicle from a company, or you have imported a vehicle. So you have to do all those whatever to get the ownership of the company of the vehicle. So either you pay 20th of January of the following year, or you pay before the transfer of the transfer of ownership of that vehicle. Then I think that is all. That is all. That is a simple presentation of that one before we do an example. Maybe if you have a question, you can ask. Eva?
Oh, so advance tax is not final tax?
Yes, it's not final.
Oh, so it's assessed per the vehicles the company use, or when you buy?
When you buy, when you buy, basically when you buy these vehicles, it is for, we have agreed that it's for commercial.
Okay.
Then if you look at your screen, there are those there are those two categories.
Yeah.
So if it is for category 1, that is vans, pickups, trucks, you pay the advance payment kulingana na tons.
Oh, tons. Okay.
Yes, tons. So you do tons. If your vehicle is carries in a Beba 3 tons, you take the 3 tons times 1,500. That is the advance whatever you will pay. So if you have bought a car, a saloon car that utatumia kwa tax, kufanya taxi, ama uweke kwa Uber, basically inabebanga, unaonanga hata ukirequest the Uber inakwambianga 3, si ndio?
Yeah.
So you take the 3 times 60 shillings. So that is what you pay as a tax, as a tax advance. So your vehicle cannot be inspected by NTSA if you have not paid advance tax. That is a condition.
Oh, it can't be inspected by NTSA?
No. So long as it's a commercial and a public service vehicle, you cannot, because that is what if you remember, we said this, it's tax paid in advance before a public service vehicle or a commercial vehicle is licensed. So for NTSA to license you, they must inspect your vehicle.
Okay.
You understand?
Yes.
So once they inspect your vehicle, that is when, before now they inspect your vehicle, that is when you are supposed to pay the advance tax and present the receipts to them. Without the advance tax, they can never inspect your vehicle and they get so that you can get licensed.
Oh, okay.
Yeah.
So
that is all. It is basically, those are advance tax is paid purely for public service vehicle or commercial vehicle before operations, before you get the license. So once you get the license, you ukisha file the first year, with the advance, umemalizana na advance, unless then utanunua gari ingine.
Oh, okay.
Yeah. Sawa. So we can go to a case study.
Yeah.
Okay. I can see, okay. So we can go to a case study. Can stop sharing this.
Oh, we have somebody, we have an chain.
Oh, I'm using that machine.
Oh, okay.
Yeah, that is the machine I'm using to project.
Oh, okay.
So we can I've seen Shireen Bakar has joined. Shireen. Oh, sorry, I'm trying to share. So you just log in, the normal login. That is iTax. Hope you are seeing my screen.
Yes.
Okay. So you just go in, log in the same way we normally log in with your PIN. I'm using an example here. Minute. Inachukua muda, cha tuipe tu time. Zero 51 86 52 95B. Let me try again. Don't know what's happening. Tax. B 051 52 5B. Sijui ni kwa nini itaki kurespond iTax. Eva.
Yes.
Itaki kurespond iTax. I don't know shida ni nini.
Unfortunately, I don't have my machine close by.
Okay. But let me try another one. Teni jaribu ingine, nione kama itakubali pia. Inakataa. I think kuna shida. I don't know the problem ni nini. So it is not I log in. Meanwhile, we can tunaweza endelea, si ndio?
Yeah.
So basically that is advanced tax. So what we can do, we can tunaweza endelea na ingine so that when the network comes back to tutafanya a case scenario.
So.
Is that okay?
Yeah, that's okay.
So we proceed to installment tax. Installment tax.
Yeah, installment.
Hope you are seeing my screen again.
Yeah. Yes, I am.
So installment. This is you make estimates and pay to KRA. So it is it's a requirement by the Tax Act. So installment tax is estimated income tax paid to KRA periodically in anticipation of the tax payable for a year of income. Installment tax is a form of advance tax administered under the Income Tax Act 470 laws of Kenya. Installment tax is paid in advance at a 4 equal installment. It is paid before the year of income is over and before the accounts of the business are prepared to establish the actual tax payable. So the law requires that for basically mostly for these are the people who are in business, the companies, also the individuals who do large businesses. So the law requires that. The law requires that you do what? You submit. You do installment 4 equal periods, so that you get your income. You estimate the whole year. You make a 4 equal installment to KRA. It's a law. Then I want you to note this. It is payable by each person subject to tax, individuals and non-individuals. So when we say individuals, there are those people who do large businesses, maybe partnership, maybe, yeah, partnership, those having big, they can estimate that one. Number 2, they are non-individuals. Basically, non-individuals, they are companies.
Are you presenting?
Yes, you are not saying?
I'm not seeing, I'm seeing the folder.
Oh, sorry. A minute. Okay. Yeah, yeah, a minute. Just a minute. Unaona sahi?
Yeah, no, yeah.
Oh, sorry. I don't know what happened. Okay, I was saying the point to note, it is payable by every person subject to tax. That is individuals and non-individuals. So I was saying non-individuals, those are companies. Any company, any individual doing business must do an installment tax. Then installment taxes are not payable by persons who are subject to turnover tax. So turnover tax, you remember the turnover tax is one of the types of the taxes it was introduced. So turnover tax is final. So once ukifanya biashara, you pay turnover tax, unamalizana. So you are not required to pay installment tax. Then installment taxes are paid by individuals, payers who have a tax liability that is not fully covered under payee. So if you are employed, and you are subjected to payee, and your payee is not fully covered, or your income is over 40,000 payable any year, you must pay what we call installment tax. So
it's not covered by payee.
Yes,
it needs to be
if not covered fully, it is not fully covered by payee. Tunajua kuna wale watu wako beyond.
Oh, yes. More than the tax bracket.
Yes. Or you have pay, but you are working, you have so many, what we call overtimes.
Oh, overtime.
Yes. Or you have pay, you are doing other businesses.
Oh.
So meaning you as an individual, you are not covered fully by pay. So you are required to pay installment tax.
Yeah.
Tuko pamoja?
Yeah.
Then Projection is normally done at the beginning of the financial year. So beginning the financial year, you must do the projection of your profits, because basically installment tax is paid in regard to your projection of your profits. So while projecting the annual tax liability, the expected withholding tax for the year is netted off in arriving at the net estimated tax liability to use in determining of installment tax payable. So if there is withholding tax, you net off.
You net it off.
Yes.
Oh, it's
So
allowable. It's allowable.
Yes. You just, if it is allowable, you just net off. You do what? You so that you can arrive at what we call the estimated tax liability. So that one we are going to do a case study that you are going to see it practically. Okay. Then how does one pay installment tax? Installment tax is paid via iTax. The normal, you log in iTax, you put your PIN, you enter into the tax the portal, then you generate a payment slip and present it together with the check, or you pay through M-Pesa, or you do a transfer to KRA at any wherever. So it's a normal payment. It's a normal thing we do. The normal pay we make to KRA. Also, in regard to installment tax, that is what we do. Okay. Then, how does one calculate installment tax?
Yes.
This may be done in either of the following ways. Those are the ways of calculating installment tax. Number one, prior year basis. So meaning the prior year basis, this is the profit of the previous year. Maybe you are in a financial year of 2022. The prior year basis, you will base your estimates on last year's profits. So you take the prior year tax payments and they multiply it by 110.
Oh, 110, huh?
110%.
No, that is prior
prior tax payments.
Oh, payments.
Yes. So the tax you made in regard to your profit of last year, you multiply by 110%. That is the estimate you get for your next year, for your current financial year. That is the tax you are supposed to pay for installment in that particular year. Pamoja?
Yes.
Then the second one, it is the current year basis. In this method, especially for new businesses, all those who are in losses and they turned to profit, profitability, installment tax is determined by estimating the current year profit and the tax payable thereon. So meaning, you just do what? You just do the projections. You say now, this year, I might make a profit of 1 million. So in regard to 1 million is you take the 30% of the you get the tax of the 1 million. That is the basis of paying the tax in installment. Are we together? So I want us those are the two methods you are going to use. But if it is a business that is continuing, you take the number one, take number two, then take the lower. The lower, yes. You take number one, you take number two, you take the lower for a continuing business. But a new business, that imeanza kufanya biashara, or a business that has not been making profit or has been making losses, imerudi sasa, imeingia into business. You use only number 2, that is current year basis. So mark the two differences. Yes.
When does a transition from making losses to profits use the current year basis?
Exactly. If it is a continuing business, you take option A, take option B, compare, get the lower. The lower is the one you are going to pay the installment tax. Are we together?
Yes.
So a minute. Kuna. Okay, so tunaweza endelea. Then before to then we can get the installment are spread evenly at 25% of the tax due, and the payable on the 20th day of the 4th month, 6th month, 9th month, and the 12th month of the year of income for all the tax except for the agricultural sector. So you do this. It is 25% for 4 installment. So meaning utalipa mwezi wa 4, mwezi wa the 4th, the 6th, the 9th, and the 12th. The deadline is on 20th. Tuko pamoja?
Yes.
But except
of the month of the paying month.
Yes. For example, let's say your financial year is from January to December. Okay. So in between there, you are supposed to pay in four times. That is 4 installments. So from January to April, Sindio? From January to April. So April kisha, so you are supposed to pay this tax by 20th of April.
But the financial year is December.
Yes, for example, we are saying that our financial year is December. So meaning, mwezi wa 4, mwezi wa 8, mwezi wa.
So the fourth month from the financial year, the end of the financial year.
Exactly. The 4th month from the financial year, of the financial year.
That's it. Oh, that's April.
Yes.
Ah, okay.
Yeah. So you spread among the, so unaona mwaka iko na 12 months.
Yeah.
So you take because it is 4 installment, you take 12, divide by 4, you get 3 months. Is that okay?
Yes.
So meaning from January to March, you pay in 20th of April.
Yes.
Then unaendelea hivyo kwenda mbele.
Yeah.
So the taxpayers in the agricultural sector pay in installment of 75% in the 9th month and the 25% in the 12th month. So you can see agricultural sector, they only pay 2 installments. 75 in the 9th month, 25 in the 12th month. Na wanamaliza.
Oh.
That's according to
this is agriculture sector.
Yeah, for only agricultural sector.
Okay.
Yeah. So point to note is balance of tax, that is the return balance, is to be paid by the end of the 4th month after the year end. That is by 30th April for December year end cases. So this means, see, at the end of the day, you have paid advance tax, and this advance, this installment tax, basically based on projections. So at the end of the day, you have done your financials. So your financials, they are actual. Ni ukweli? Then now you need to do their own tax. So you will either get, maybe the tax is high or lower according to what you pay. Ni ukweli? So if it is your taxes are high from the installment, what you need to understand, you take the fourth year, the 4 installments, you had them, you sum them, you get, for example, it is 1 million. That was for projected. Then you come get your actual profit. Maybe your actual profit, the tax on your actual profit was 1.2. So you see there is like a balance there you need to pay.
Yes.
Or you can get the vice versa.
Okay.
You can either get vice versa. Maybe you get your profit was lower than what you projected. So what you do, you either claim a refund or wait in the next financial year offset.
Okay.
Tumeona mpaka hapo?
You claim a refund or you wait until next year.
Yes, you offset. Meaning, instead next year, maybe you are supposed to pay 800,000. Now ulikuwa na overpayment ya 200,000, you will only pay 600,000.
Okay.
Yeah. Those are the options. When you have the installment tax is more than the actual tax. Yeah.
So so that means by 20th of the following month, of the 4th month, the business must have paid the tax,
Yeah.
by 20th.
By 20th, that is installment tax. You see, what we have agreed is installment tax, you pay in 4 installments. And this installment tax is based on the projection.
Oh, projections.
Yes. Remember, this is not the actual. At the end of the day, after your financial year is when you do the actual profit.
Okay.
It is the law that requires you must pay installment tax. So inaona itapotea in the next 1 minute, ikipotea tutalog in haraka haraka.
Okay.
Yeah. So am I clear mpaka hapo?
I'm trying to understand. Financial year has ended. You have the financials, and because now the year is ending December, we must have paid the installment tax by 20th of the 4th month, which is April. So that means we'll pay another installment on the 6th month, and on the 9th and on the 12th, based on the financial years of